Okay. All right. All right. Let's get cracking here. Welcome everyone. Like I was explaining earlier, I'm going to do just a quick session on some trades that I see opportunities happening right now. Let's do an update, a recap on some of the trades that we already have going. And let's take a look at some of the pending orders that haven't executed yet. And along the way, if you guys have any questions, throw them into the chat. I'm going to open up the chat box here. Okay. So first off, just quick market overview. I was really shocked to see price turn around today like it did. It was looking like it was going to be all about the vaccine rolling out to the U.S. Even though it's tiny quantities, anything vaccine related is going to be great for the market. I was surprised to see a sell-off, and it just kind of goes back to that market update I did last week. This circle that I have drawn here, we have a lot of space in between our indicators right now. And our oscillators are selling off here. These two are leading indicators. These are lagging, right? So these are going to represent a change in trend direction. These are going to represent a change in change of trend direction first. And they did back here. Now they're just kind of following suit. So we're having a little bit of a sell-off, but I wouldn't even come close to saying a correction. We're coming back to these highs right here. And it might just bounce off of this and keep on going. So we'll see. There's a lot of pressure in the market to be bullish right now, but it's been going strong pretty heavy for a while. And it just seems like there's some areas that need to be recounted. So to see this reverse like that is a pretty bearish indicator. You could almost look at this on a shorter term time frame and notice that we are making, in technical terms, a high, a low, a higher low. Okay, this is a short time frame, so I'm not going to take this too seriously. I'm not going to put too much eggs in this basket, but I'm going to notice it. I'm going to notice if we come down, we make another higher low. If we make too many, then we have a change of direction. But if we make another one, we could just be forming bull flag. So that's just obviously a continuation pattern, right? But going to the VIX here, I've been talking about this for a while. We had these two indicators making divergences, and it's totally playing out. The VIX bounced off of the support area, and we're getting more volatility now. And volatility is good for certain options. We like volatility when we are selling options because it provides for a higher implied volatility, which means that we're going to get paid more premiums, which is what we're going to talk about today. So to the stocks that I have been looking at are, for a while now, are Bed Bath & Beyond. Let's talk about this one first. This bounced off of here, and I actually wasn't sure if it was going to hold. I wanted to put a short-term bull put spread on this, and it would have worked out great. And I probably could have closed this within the first week, but it was just such a strong sell-off. There was this big gap, and I wasn't sure how much this was going to correct. So here we are again. And now I'm thinking, okay, well, I'm overall bullish on this stock. I'm overall bullish on the market, right? But I'm overall bullish on the stock. We do have this gap, and we have this significant support level. We're creating a little bit of a wedge here. Right there. And we're creating a little bit of this wedge. So if price can actually hold this, I can see it's bouncing out and going further. If it can't, I can see it doing a little bit of a consolidation of that gap over there to the left, and then bouncing right back off, and then eventually making that move. So maybe closing this gap. Again, price doesn't have to close gaps. Most times stocks don't close gaps, but sometimes they do, right? And if it does do that, it might come down 50% of it, 2/3 of it, who knows, the whole thing. But I don't see Bed Bath & Beyond for some reason just tanking all of a sudden. I don't see that. And we've got a nice steady uptrend here. And everything just kind of lines up, doesn't it? We've got highs, we got lows, higher lows, just kind of making that up and up movement. Kind of took off a little prematurely here. There was some good earnings, that's why. And then things kind of came back to a realization of people are still not really spending as much as they used to. So selling back off a little bit. But if price were to come back down here, it would coincide with that support level and then eventually make its run. So what I'm looking at this is I'm looking for a bull put spread, and we're going to actually do that. And we're gonna look at this stock too. BBBY. So if you have your Thinkorswim platforms up, I'm going to go through this slowly. And if you're not ready to do that, just rewatch the video here. So I'm going to be looking at the January 8th. So I'm looking at a not too short a term. When it comes to doing selling any kind of puts or calls, and I'm going for that premium, I don't want to be in it too long. But I also don't want to be in it too short, right? So this is kind of right in the middle. January 8th is right in the middle on that one. And I'm going to base my strike prices off of what I'm seeing in price. So going back here, taking a look, I can see that price right here that's $18. So I kind of want to, I don't want to sell anything too much higher than 18, because then automatically I will be out of the money on that short put, and then it'll be going against us, which is fine because we're doing this for two reasons. There's two points of the strategy. So I want to give this a chance to go with the initial direction, which is to make the premium to be neutral or go up, one of the two, right? So what we're looking for this to do is two things. We can either, we want it to either stay neutral or go up. I'm going to go back to the chart here. Sorry for bouncing around. I'm going to write it down. We want this to be neutral or bullish, right? Strategies are, we make money on the premium, okay? This goes against us. We make money on the stock. So this kind of strategy, it's a strategy that I've talked about many times. We have trades, we have place trades and close trades on the strategy. We're going to keep talking about this strategy. I love this strategy. It's a good one. There's many good strategies out there, but this one I like a lot. A friend of mine uses a lot because there's no way to lose on this trade. Now, nothing's guaranteed, obviously. We really want it to do one thing. We want to really just stay flat or go up. That's the easiest thing to do. But if it doesn't, I can close my long leg, which is the long put, right? I'll make some money on that. I'll get assigned on the short put, then I'll own the stock. So then I'll be in the red a little bit from getting assigned at a lower price, let's say, but I want to own this stock. At some point, it would be nice to own this stock. Either way I look at it. So I don't really care whether or not it goes flat or up or down. It would be nice to make some premium on it. It'd be nice to own it, make some money on the stock increasing in value, and then what we could do is sell calls on it. So there's lots of different options on this. So that's why we're going to take this trade. We like this trade. It looks good. So how we're going to do this is we're going to sell the January 8th. Okay, it's 25 days out. And right now I just have it on singles. What I'm going to do is I'm going to change this to a vertical. Okay, so then I can look at this and I can say, okay, I want to select this one right here. And right now we can see our bid ask is 1040. That's a pretty good spread, not too big. So I'm gonna right click on this and I'm gonna hit sell. Now right now it's only a 50%. It's only a 50-cent. It's only a 50-cent spread in between these two strike prices. I want it to be at least $1 gap. Okay, or a 50-cent gap. I want it to be at least $1 gap. So I'm going to say hit right click, hit sell, go all the way down to deep and wide, and then I'm going to go up to 1 month, 2 strikes, and vertical. Okay, now all that did was, you can see right here that says 17.5, $17.5 over 18. So now it's 17 over, not 17 and a half, now it's 17 over 18. So now it's $1 wide instead of 50 cents wide. So what that does for me is that gives me a better premium. The other premium would have been half of this, wouldn't have been worth it. So now it looks like we're going to make 55 cents per contract, or excuse me, 45 cents per contract. If I'm on one contract here, make sure that yours says 1. It might start off with 10, change that to 1. And what I'll do here is I'm going to hit confirm and send. So my max profit on this is to make $45. I'm risking my max loss is 55, right? So the ratio here is very good. I like this trade, so I'm going to go ahead and send it off. Okay, now you know what? I already realized that I made a goof here. One of the things that I always forget to check here that I always remember, I always forget to remind you guys, is to make sure that we're going to cancel this order. You got to make sure that it says good till close. Let's go ahead and cancel that and delete it. Okay, so now cancel order. There we go. Okay, so we're just going to redo the whole thing. This will just give you guys good practice. Right click, sell, all the way down to deep and wide. And again, if you're not doing this with me on your own screen, no problem. This will be good practice for you to just rewatch it and go do it yourself. And make sure you guys do put this in, whether this is live or a paper trade. Make sure you guys are doing this. I do this on both. So right here, the reason that I canceled that last order is so I could start over and I could show you how I did it. Remember, 18, 17, we're short the 18, we're long the 17. Okay, if the type is a put, we're going to make 45 cents. We're going to hit GTC and we're going to hit confirm and send. GTC means good till close. If we had left it on day, tomorrow would have been gone because it was good for the day. Well, the day is closed, right? It's over. So you put GTC and this should get executed tomorrow at some point. So they confirm and good to go. Okay, so there's that one. Let's go take a look at the other trade I wanted to look at, and that was this is already a trade that we are in. Okay, Teladoc. I made a trade call to pick this up at about 190. And a lot of you were triggered on that, which is great. And we were doing really well. And we've kind of since flattened out a little bit. And I've been watching this very closely, and it's stalling, which is totally fine. We're just going to analyze and see how we can manage this trade, because if this is a trade that you're thinking, I don't know how long I'll own it, but I want to own it. Well, you should have a strategy. I never just buy things just to have them because I like them. I buy things because I like them, but I have to have a strategy. How long do I want to sit in on this? Is this going to be intermediate trade? Intermediate means anywhere from 2 to 6 months, or sorry, 6 months to a year. Is this going to be a long-term trade? That means a year and greater. Short-term trades are anywhere from 1 month to 6 months, right? So if I know that this is going to be a minimum of an intermediate trade, then it's like, okay, well, I know I'm going to be sitting on this for a while, so I might as well be proactive about it. Maybe I can do some protecting on it, all kinds of different option strategies. When we first looked at this, I was looking at doing verticals on it because it's kind of expensive. And as you guys can see right here, is this that's the right one? Yeah. The spreads on this are really bad. So we can't look at this because if you remember the last spread, it was 10 cents to 40 cents. This is 20 cents to $2.90, right? That's a massive spread. So we can't even look at this on a vertical. So we can really only do long single orders, long calls, long puts, short calls, short puts, which is fine, because maybe we can do some short calls on this. But for the we're actually not quite ready yet because we're watching this stock and we're waiting to see what's going to happen here. This trend line, I drew this before, and you can see that this is now a point at which prices become familiar with, right? It's made a lot of touches, it's made a lot of bounces, it's broken through, it's bounced off. So it's now a significant line of support and resistance. So what we want to watch and wait to see what happens here is if the market does correct a little bit, kind of filled that space that I was referring to, then we might see this thing start to make a little bit of a direction change here in the short term before it makes its way back up, right? So if that's the case, we don't know how long that's going to be, but we kind of want to protect our long position, right? And we can do that with several different strategies. We can buy a call, or sorry, we can buy a put. We can sell a call, but you have to answer yourself two questions. Do I own under 100 shares? If the answer is yes to that, then you can't sell a call because that would be a naked call and we don't do those. Okay, it's too dangerous. It's not worth it. So that leaves us with a couple of the strategies. It leaves us with doing verticals or buying puts. Well, we already know that doing a vertical on this is not going to be very favorable for us. Doesn't mean it's completely out, but it's not going to be favorable. So that leaves us with really one option, which means buying a put. So I'll go to that in a second. At the current moment, we're not going to do anything. We're still up on the stock. It's a intermediate to long-term position. I'm happy. Even if this does break this, I'm still not bearish to stock, but I want to protect it. I want to control my gains by mitigating the losses, right? So I'm going to go over to here and I'm just going to look in the short term. If I were to do something like that, what does it look like? It's kind of expensive. So if I do that, I need to make sure that it really makes sense to do that. So since that's not really on the table yet, we're not going to worry about it yet, but we are watching this. We are waiting to see what happens here. This is kind of a decision point to see if we do need to make some strategic plays in order for us to protect our position and even maybe make some premium on it. You know, that'd be kind of nice, right? You walk away with, you could end up selling the stock at some point at 230 or whatever it is that you want to do, 250, whatever it is, and maybe you make some premium on the way up. We'll see what happens, right? So we're going to keep our eyes on this. We also have to take a look at our indicators here. Our they're still bullish, but you can see that they are diverging right here. Now, I haven't talked a lot about divergence and how it's truly defined. So I'm going to do some lessons on that, but just to reiterate and to simplify it, if this is going the opposite direction of price, that means divergence. Okay, there's more intricacies into it, but I just look at this quickly and at a glance, and I can say, this is going down, this is going up. There's something up here, right? But we have to wait for confirmation. So that was one of the stocks. Anybody have any questions on either of those two stocks? Was everyone able to place that trade on Bed Bath & Beyond? That trade will probably get filled tomorrow. I'm pretty certain. So if you were not able to get that trade in now, make sure that you get it in first thing in the morning, because tomorrow will be the day to get that in. That's going to be a really good trade for us to have running. So the other one was CAD Chef. Okay. Awesome. Great, David. Okay, so CAD Chef. I've been talking about this a bunch. The strategy is called a bull put spread. That is correct, Tony. A bull put spread, or a short put vertical. There's like 3 different names, but bull put spread, that's correct. And just to reiterate on that, the strategy the reason that we're using that strategy on that, specifically that one, is we want to have different scenarios that we can choose from. Meaning, if it does break through, we can own the shares, so on and so forth. If it doesn't, it just goes up. We make some money on the premium, et cetera, right? You get the idea. The reason that we're choosing that is because we want to have different scenarios that we can choose from. So either way, we're going to make money on that one, which is exciting. Okay, so this currency pair right here, I've sent lots of posts about, and I really wanted to pick it up at 68.90. And if I bring this down to a 1-hour chart and zoom out, we missed it. Let's go to my Forex template here. Much better, much cleaner. We missed it by 5 pips. That's annoying. But I'm not concerned because this wasn't a shorter term trade. I'm expecting this to take a while to play out. And what has it done so far? Nothing, right? So the further this gets into this wedge pattern, the more of a breakout we may see. And the reason I say may is because this is not really a breakout pair. This is not one of those pairs that will just run in one direction for a long time. This is one of these pairs that really takes its time moving in a specific direction. And that's why we're trading it, because it's a lower volatility trade. And it's just going to pay us out really well. And I like that. So I'm bringing this one up because it's an order, pending order, and we're waiting for this to do one of 2 things: break out of this area right here, or come back down here so we can pick it up around here. You could even say you could short it down to this and if it breaks out here, you could try and short it down to here, make some money off of that. It's a little too short term for me. You have to be watching the charts pretty much every hour. And I know for a lot of you, that's not quite possible. So we're going to look at this on a longer term. The minimum is 4 hours. That's pretty easy to do. These are 4-hour candlesticks. That means that you only have to check this out once every 4 hours. And as you can see, this is a few days worth of time here, or this is a couple days worth of time here. It didn't do much, right? So we're waiting for this. I, of course, will let you know when I see it happen. But if you're paying attention to this, which you should be, you want to see price break above here. And we want to see it close. We really want to see it trade above this, right? These pivot points right here, we've got them in a line right here. These pivots are weekly and monthly pivots, right? So this is based off of a whole month of price. The reason that there's nothing here yet is because this was started from this price area here, right? So this line is suggesting that we're going to see price have a hard time getting above or below this, right? That's what that's saying. This is saying the same thing. You're going to have a hard time getting back above here. This is a week's time frame. So when it does get above, we want it to actually trade above it, because it tried to do that here and it came back down. It tried to do that here. Look at this wick on this candlestick. I haven't talked a lot about wicks, but wicks, when you see this huge line right here, but no volume, no body, it means that at the time, this thing was ready to go and you could have been easily faked out in a bull trap. Meaning you would have bought in here, maybe you got in up there, and then it came back down and here it is now, right? Which is not a huge deal, which another reason why I like this pair. Even if you had gotten back, even if you had bought back up here, that's only 33 pips, right? So like I said, it's not a huge mover, but we don't want to get faked out. So we're waiting for this to break above and trade above, okay? So break above and trade above. So and I'm seeing this happening soon. On the flip side, coming down here, we don't need to see it trade down here. We need to see it come down and just get in. I want to get in anywhere around here, anywhere around this price. I like it because I am long-term bullish on this pair. I want to get in anywhere around here. So if we start seeing price come down here, let's have those pending orders ready. So I have those in the group chat. And I showed you guys how to set up FX trade. And you guys should all know how to do that. So let's be ready for this one. I see this one coming. Here's one more, and then I'm gonna call it a day unless you guys have any questions before we go. Excuse me. This is the Euro Chef, another pair that I've been excited about for way too long. It's been trending down for a long time. I've talked about this in other classes. It's ready to make its move up. It's ready to start doing that. However, it's getting stuck in this little sideways channel here. And it looked like it was going to break out right here, but it faked out. Now, what we have right here is, I'm not sure if we have a short-term bear flag or what's going on, but until we see this kind of consolidate and get back up to here, I'm not doing anything. If this breaks down, I'm long on this pair at 1.0700. I'm going to write that down. This is a pending order. I haven't placed it yet, but I will. 1.0700 buy limit. Okay. So you can set this right now. Go ahead and pull up your FX trade. Make sure you have that figured out, because you can set this right now. Buy at 1.0700. You could put your stops all the way down here. You can start with a 50 pip stop. I'm going to have my stops a lot further down here. Remember, basing how we use our risk is we base our risk all off of our stop losses, right? And Forex. So if I have a 50 pip stop, that meaning I'm only risking 50 pips, if I $1 per pip, I'm risking $50, right? So if I know that I'm going to do at least 0.5% on this trade, you get the idea on $10,000, et cetera, right? So so very important that this could be one stop area. Excuse me. This can be one stop area here. I'm going to make mine a little bit larger. I don't want mine to be too tight. Okay. So anyways, back to the bottom line here. I have a pending order right now. It's set. I forget it. I'm good to go. This comes down and even touches that. I'm in. I'm ready to go. And that's just for a buy limit at 1.0700. Anything above that, we need to see what happens here. If it kind of consolidates and does this stuff, I want to wait. But above 1.0850, around this area right here, 1.08, 1.0850, we want to start looking at getting long. So price does not come back down here. If it does not do that, we'll wait to see if it can get back above these resistance levels, and then eventually do what we need to see it do, which is break out of this and go running up, which our target on this, by the way, is all the way up here. Okay. So like I said, this is a long-term trade. We might not actually wait that long to capture profit on this, but for like, we might say a smaller term target on this is 1.10, right? So there's 150 pips there, then almost 400 pips here, right? So if we have, we'll end up doing multiple positions on this, et cetera, et cetera. So there's a lot of opportunity on this. But last time, buy limit, set it right now, 1.0700, okay? All right, you guys, that's all I really had for you. So I hope you got in Bed Bath & Beyond and the CAD Chef. We talked a little bit about TDOC. There's going to be one more pending order for tomorrow, and that is American Airlines. I almost put it in today, but this thing just kind of did one of these moves. I'm still probably going to put it in, but that I won't be doing it until at least tomorrow. So Bed Bath & Beyond, CAD Chef, we got some really good stuff coming up. So make sure you guys get those orders in. And of course, I'll keep you all posted on the chat. And if you guys need anything from me, please let me know. Tony, can you quickly show how to put in a buy limit for Euro Chef on FX Trader? Absolutely. Okay. There it is. Okay, I'm pulling up my Oanda desktop. Okay, connect. I should have already had this open. Oh, so painful. I think it's that. We'll find out. Nope. Success. Okay. All right. So we go to Forex and let's find Euro Chef. And let's just go ahead and do this actually. I'm going to just click Euro Chef. It brings up the chart. I'm looking at buying it, right? And where was I looking at buying it? I was looking at doing an entry order. So make sure I go to that. Market order, remember this, guys. Market order is just going to put you in right wherever the market is. So whatever price it is. I'm looking at doing a entry order, and I want to get in at 0700. Okay. Now remember, units, I talked about this the last time in the video. 10,000 means $1 per pip, right? Or in this case, it's $1.12. So I'm just going to keep it on that because everyone's going to have different account sizes. So if we decide on this particular trade that we want to risk 1% on it, and we go with a larger stop, let's go back to our chart here very quickly. EURCHF. If I want to give myself some leeway here, 0595, that's 105 pips, right? So on on a $100,000 account, 1% will be 1% will be $1,000. So that means that I can do 10 contracts, right? So maybe on this one I want to do half a percent. So 5 contracts. So that means that I would do 5,0,0,0. Now you should be using exactly how much money you have. So that means if you have, $58,000, you should be using it to the T, which is the beauty of this Forex platform, which is one of the reasons we're using it, because you can go to the T. You can go 5,8,0,0,0. You can see that it goes down to the exact dollar that we want to risk here, right? So I'm just, for demonstration, I'm just going to put it back to 10,000. My rate is 1.0700. Expires? Never expires. This is not an option, right? Taking profit. Well, my first target's 10, so we'll just put it at 10, right? My stop loss, that was very specific. That was 0495. 0495. Okay. So I've got everything I need. Got my units, the buy limit order, no expiration, my take profit, and my stop loss. I'm going to go ahead and submit it. Server accepted entry order. Excellent. Okay. I'm going to close this, and I'm going to look at my orders, and there it is. Okay. Tony, did you get that? Did everybody get that? Great. Excellent. Okay, you guys. Thanks for being here. It was good to see you all again. Wish me luck. And I would still plan on seeing you guys on Thursday. On Thursday, we are going to talk about doing the 7 steps of setting up an option. I've been working on this for quite a while, so I'm excited to present this to you guys. Again, this is just a plethora of things that I'm here to share with you guys, right? And also, I haven't gotten some of the dues from you guys. I'm going to put that in the chat, the PayPal link. If you guys could please take care of that today, I would really appreciate it. Going forward, it's going to be a lot simpler. Once I get the website up, it's going to be all automatic, so we won't have to worry about that anymore. But